I'll start with two apologies and a credit. The first apology is a slightly convoluted title, maybe a bit difficult to read. Secondly, it probably is out of place in this session, and it's more to do with the first session. The credit is to the Financial Times. They cooked up a delicious term, the austerity Ayatollahs. Of course, they were referring to the Germans. And since I'm probably the only austerity Ayatollah in Pakistan, I decided to change that to growth Ayatollahs. And I didn't have too many people in mind. I hadn't heard Dr. Irfan's presentation yesterday, but I did have a recurring vision of one person, and that was Dr. Rashid Amjad, for being the ultimate growth Ayatollah, and always egging me on to abandon austerity and get on with it. So I think it's time to move on with this supposed ostensible growth reform trade-off. And I'll weave in the constraints towards the end, and maybe that's one way we can lead it. Okay. What's the backdrop? The backdrop is that, of course, Pakistan's current economic condition, we've been in a secular economic decline for a couple of decades now. It's really beginning to dawn on most people now, but the policymakers are still asleep. But it's a secular decline, and we need to get at the bottom of this. So let me just take you through this. If, for a politician a few weeks ago, I described Pakistan's economic condition as empty treasury, broken economy. They like these sound bites, and I think it's stuck in his head. But for the economists, of course, it's something which Dr. Rashid, coined, a few years ago. We are mired in stagflation. And as I think Akbar said, and many others have said, it's a low growth equilibrium that Pakistan has settled into. So that's something that, the numbers all support. And a few weeks ago at the launch of the IPP annual report, Dr. Burki rightly dubbed Pakistan as the sick man of South Asia. And I think you can extend this, unfortunately, to the sick man of sub-Saharan Africa. Because our numbers are now, it's not just Bangladesh, we're all fixated on Bangladesh overtaking us. Sub-Saharan African growth numbers are now looking better than Pakistan. So, if I were to continue, just briefly, this plummeting investment, Asim's talked about it, a number of reasons, not just the energy crisis. Like I said, it precedes the energy crisis, the investment decline, high unemployment, rising hopelessness. And it's all feeding into frenzied calls for abandoning austerity as if we ever achieved austerity, and an immediate return to high growth. So my take is that, of course, there's a similar sentiment which is sweeping Europe, and it's not surprisingly coming from our closest business cousins, which are the Greeks, who, like Pakistanis, have lived well beyond their means for quite a few, maybe centuries or decades or whatever. So it's a tough call whether one should disabuse ourselves of the notion of austerity, whether we really achieved austerity with a fiscal deficit of 7% for the last 4 years consecutive, a fiscal deficit approaching over 6% for maybe 4 or 5 decades, and all the other parameters, or the grand notion of high growth. So let me just talk about growth first, and recap Pakistan's growth experience and what are the important lessons we've learned. And by the way, I will not attribute this to the Planning Commission. It's a bit disinterested. Many of us have done this growth work before the Planning Commission. So attribute it to all the economists sitting here who've done it before the Planning Commission. I have not been sufficiently cited or attributed as a new growth framework. The first lesson is that growth has not been sustainable or durable in Pakistan. And I place before you evidence A, which is a very simple table. If you look at 1980 to 2010, 31 years, who's done what in the neighborhood? Vietnam is not that close by, but even then. So the average growth rate for China has been 10%, for Vietnam 6.6, India 6.1, Pakistan has lagged at 5.3. And of course, if you were to look at more backloaded data, more recent data, Pakistan's numbers are even lower. And what's interesting is who's done it on a sustained basis. So as we know, China's growth, phenomenal growth, dates back to 1978 on almost a consistent basis. Just 2 years of below 5% growth since. Vietnam since 17 years, a few years of low growth, but 20 years of 6% plus out of 31 since 1980. India 17 out of 31. And guess who's the laggard here? 12 out of 31 for Pakistan. So clearly something is wrong even within our fixation for high growth. I'm sorry if you can, I don't know if you can see the slide at the back, the color combination is not too great. But this is the per capita growth on a purchasing power parity basis, a 20-year compound rate.
Once again, you find Pakistan is at the bottom of the selection, and China is about 2.5 times on an annual basis growing faster than Pakistan. Lesson 2 is growth has not been inclusive, and here it's obviously controversial because I don't want to get into this, but the Planning Commission has come up with a 12% headcount ratio, which they're too embarrassed to reveal now. But I'll stick to my position that growth has not been inclusive, because even these bouts of getting getting declining headcount ratios, as we discussed in the morning, there's a huge punching around the poverty line, and poverty lines have been drawn quite inconspicuously or self-servingly in South Asia at least. So it's a moot point whether growth has been inclusive or not. I maintain it's not been inclusive. It's also come at a high fiscal cost, and I didn't have time to work this out, but very quickly the rough calculation would be, you look at over a period of time the increase in the per capita income growth, and just one statistic, because we've relied so much on fiscal stimuli or monetary stimuli for our growth in the past, that you look at the per capita change in debt. So our debt, the accumulation of per capita debt has pretty much wiped out the gains in the accumulation in per capita income. So we are doing it we're getting these per capita income gains at a very high fiscal cost. And I'll just give you one example here from the Planning Commission, which is that currently, when we went on the last growth bench that we did between 2003 and 2000, we actually ramped up the PSTB between 2005 and 2007. That's left us with a fiscal hole of over 3 trillion rupees of throw forward. So at the current rate, we're going to take 12 to 15 years to just work off that throw forward. So it's come at a very high fiscal cost. And this is something which Ijaz and others have discussed. It has not really led to a structural transformation, and I think I'll need to cite Jesus Felipe and Ricardo Hausman for this, because they've done more extensive work on where Pakistan has not, its economy has not structurally transformed compared to many other high-growth economies or better-performing economies. And I'll just lay one exhibit in front of you, which is with our export share, not just as a percentage of GDP within the economy, not just as a percentage of world market share on a static basis, but also on a dynamic basis comparing with the past, but per capita exports as well. And how the actual nominal export numbers, the last two columns, have changed. So how better performing economies have grown in the last 20 years or so. And what we find is, in the last 10 years, between 2000 and 2010, we find that China has increased its exports, not just the share of world exports, but actual nominal exports by a phenomenal 6.3 times in a 10-year period. And you go down the list, it's been sorted by the last column. You've got India, a very high performer, Vietnam, Cambodia, Bangladesh, etc., and Pakistan, somewhere around Indonesia and Malaysia, but they had a much higher base of exports. So, I'm just using this one exhibit as a case that growth has not led to structural transformation. And of course, this goes back to what William Easterly said many years ago: Pakistan is a case of growth without development. I suppose this is one of the things he had in mind. The other thing which we need to disabuse ourselves is growth does not, or has not, led to an autonomous increase in tax revenues in Pakistan. And that's important, because a large part of the debate in Europe, people try to replicate that for Pakistan, and it's not true. I mean, we're not Europe. So therefore, there's some structural gaps, missing links in Pakistan, where we've not been able to translate growth, episodes of growth, into tax revenues. And here, let's have a look at this. The tax to GDP ratio has remained within a tight band, even in the Musharraf years, where we had several years of high growth. So there's structural issues here that need to be dealt with first. So we need to disabuse ourselves that growth is the answer to our problems. This is a change in nominal GDP versus the change in tax collection. And this tax collection is both elasticity and buoyancy. So this is with measures. And we're only capturing, at best, 70% of the nominal growth into taxes. So for every 1 unit of growth, we're getting 0.7 unit in the FPR coffers. And this is with measures. So there's something broken in the economy structurally that we need to fix. And this is a favorite slide I've used a number of times. This is, the first bullet is something that I was tasked to do when I was in the Ministry of Finance by the Finance Minister. So we sat down with Nadra's phenomenally powerful database, and the FBR, and we came up with a list of almost 800,000 people just in 3 cities, Lahore, Karachi, and Islamabad, who fulfilled multiple criteria of asset ownership, travel, club membership, etc., but were not found on the tax register. It's not that they had empty numbers and were not paying taxes. They were not on Pakistan's tax register, but they were extremely wealthy. In fact, we had access to their bank account details as well. So I can tell you they're extremely wealthy people. The second is, one subset of that is 61% of Parliament filed nil taxable income in their last income tax returns, and yet, according to PILDAT, they've witnessed a 3-fold increase in their declared assets. Lesson 6 is, and this is a lot of people about you, people like Dr. Salman Shah, so credible people, that if you want to lower inflation, you need a supply side boost to Pakistan, to the economy. Unfortunately, our historical experience shows that every time we've had a boost to growth, aggregate demand has gone out of control, out of whack with the supply side. Supply side response always takes a time, 3, 4, 5 years. Therefore, in the interim, you have entrenched inflation, which feeds into another cycle through expectations. So this really does not work as well, giving a supply side boost to the economy in terms of inflation. So what are the conclusions? I think policymakers have been too fixated on growth right from Pakistan's independence. Growth is not is not a silver bullet. It's a means to an end, and we've taken it as an end in itself. And I'll just give you 2 small examples here. Iran and Cuba. They may be extreme, or may be extreme sounding, but if you look at their growth history, they've not performed as well as Pakistan for 50 years. The growth has not been phenomenal, especially if you strip out Iran's oil economy from the rest of the economy. However, if you look at their Human Development Index rankings, there's several scores better than Pakistan. So I think that's the fundamental lesson that we've lost our policymakers. We've fixated with growth, we're obsessed with growth, and the benefits of growth have been captured almost exclusively by the elite in Pakistan. So maybe that's what's driving the policymakers thinking, but it's not a panacea. And we need to fix growth. I'm not against growth, person. It's just that we need better growth. We need a better process, a better quality of growth, which is both sustainable as well as inclusive. And the final point about fiscal and monetary stimuli, which a lot of people are talking about, and we need it at this point in time. One, our debt situation does not allow for a fiscal stimulus or a monetary easing. Also, these are anti-cyclical measures. They're not structural measures. We need structural measures. We cannot take France's new growth plan and try to replicate it onto Pakistan. Those are different economies. So what we need is perhaps more Germanic austerity, but focusing on structural and institutional reform. And this is what I mean. And this is one slide which I've used in the past as well. A comparison between Pakistan and India on just 4 or 5 of the world governance indicators. And you look at the last column, which is the differential in the percentile rank between Pakistan and India. Control of corruption, we are 30, it's not just with 13th percentile, we're better than 13% of the countries in the world, is that with 34 ranks behind India on this. In accountability, with 39 ranks behind India. In rule of law, with 37 ranks behind India. Okay, and India may not be a stellar example, but it's next door, and it's something's fixed in their economy, which is delivering growth on a sustainable basis. So if you look at this, I think this is the slide, the only slide policymakers should focus on for the next 5 years and get their act together in terms of structural reform and institutional reform before we talk about getting growth back in. Now the constraints, of course I had to weave something in to make myself relevant for this session. But this is the way I look at, and not just myself, I think many of us look at Pakistan's medium-term outlook. Once again, let's disabuse ourselves. I mean, fantastic, I've written about the middle class in Pakistan. Maybe I regret it now, being taken out of context. But the fact is, with all our resilience and everything, all our endowments, we're looking at an extremely constrained outlook for Pakistan in the medium term. There's a capital constraint, when foreign capital will not be available to Pakistan, and there's domestic capital flight taking place. There's the end of cheap energy. I mean, even if we get our act together and get the energy going, is the end of the era of cheap energy in Pakistan, and we all need to get used to that. And of course, that will impose a huge constraint on the cost structure for businesses in Pakistan. There's a liquidity constraint if we get into an IMF program, which I think by 2013 early part, we will need to get into an IMF program. And that will introduce for at least about a year a very large liquidity constraint, because the banking sector will probably seize up in terms of its ability to lend credit to businesses. And of course, going forward, we have the intensification of the water stress. So that's but of course, the potential growth drivers, we can capture these, and not all of them require a huge fiscal stimulus. They require better prioritization of our not just priorities but our resources as well. There's energy availability, making that that availability a top priority. The Planning Commission, I think, is lowballing the effect on the economy. Personally, I think, and the IPP has done work on this as well. Both our estimates are close to 3 to 4% of GDP has been knocked off each year since 2008 because of the energy crisis. And cumulatively, that's about $64 billion of lost GDP in 4 years. We need better governance, and that will improve the investment environment. I fully agree with I've seen what Asad is referring to, the lack of capacity, the institutional decay is referred to, and the absolute gridlock in policy making, even at the ECC level. And of course, better governance will lead to reverse capital flight, lower taxes for the formal sector, and greater resource availability for higher priority spending. But somebody needs to get their act together and prioritize. And of course, there are improvements in agricultural productivity, and I think that's going to be a huge potential for Pakistan. We don't really need what Dr. Pasha said. We really don't need sexy sectors. Back to basics can do a lot for Pakistan. There's regional connectivity, which was talked about in the morning, and this is the Planning Commission's work, freeing land markets, and that doesn't require fiscal stimulus as such, and that's how we can navigate and get growth back into the economy. But it all requires fundamental institutional and structural reform. Thank you.